Hey everybody, it's Daniel here from InfoVest. Hope you're all doing well. So you might have already seen it, you might have already heard it on TikTok, on Twitter, on Facebook. Canada did its 50 basis point rate cut. Lo and behold, we got the big rate cut, the jumbo rate cut that markets were predicting and pricing in. Not your usual 25 basis point rate cut that Bank of Canada was doing, and they finally moved to the 50 basis point rate cut. Now that doesn't mean that they're going to do continuous 50 basis point rate cut in the coming months. They can definitely slow it down to the 25 basis points cut in coming this December, but things can change rapidly depending on how and where the economy goes. Now, the question you want to ask yourself, right, when you're comparing Canada and you're looking at the US being more slower when it comes to cutting rates. We have the Fed, the US Federal Reserve, coming out. I believe it is next week. Let me just check real quick here. Yes, I believe it's next week on the 7th. We have the Fed coming out, and it's expected that they're going to do the 25 basis point rate cut in November. Now, they're not as aggressive as Canada. And the question you want to ask is why? What's going on here? Well, first of all, right, we've got elections coming up in the US, literally next week, right before the Fed meeting. So that's kind of throwing things around, you could argue. The data, if you believe in it, is looking strong in the US, and that's keeping the Fed from doing any kind of massive rate cuts. But what about all the bearish arguments we heard, right? Especially, I've been talking about it a lot on this channel, right? We've been talking about the commercial real estate market. We've been talking about the yield curve. We've been talking about consumer credit getting worse off, inflation, shelter inflation, right? Let's not forget that, food and shelter continues and remains to be high. Even though we're seeing that inflation metric come down, your essentials are still expensive. And let's not forget the job losses, right? It's slowly creeping up in the US. But in Canada, it's a different scenario there. In Canada, you're getting a little bit more of stricter rules in terms of immigration. You're getting the unemployment rate. Now, I mentioned about this many months back, and I said, watch the unemployment rate in Canada. And I still say that today. What a jump we've seen in the unemployment rate. A slight, steady, gradual increase. I shouldn't call it a jump, but a gradual increase over the months. Right? When we look at Canada's unemployment rate, the lowest point was back in 2022, where it was sitting around 4.9%. We saw the highest level just recently around 6.6%. We saw a massive increase in the unemployment rate. And this is very important because the role of the central bank is not only to bring inflation down, is to make sure that jobs are plentiful and that you're not going to get a massive increase in the unemployment rate or there's going to be massive layoffs. Although we are seeing that in many big tech firms and companies out there. We've heard it all past year before that, right? The layoffs. But when we look at and we compare the US's unemployment rate versus Canada's unemployment rate looks a little bit worse off, a little bit ugly in the unemployment rate. And it's creeping up quite a bit from its low of 4.9%. Now, That's what I would say you want to focus on, especially when it comes to those rate cuts. Now, you're going to hear on TikTok from everyone, right? The realtors, the mortgage agents saying that, okay, guys, it's now the time to go buy, and the real estate prices are going to skyrocket, and don't miss out, and etc. and etc. Don't get me wrong, I'm not against going long the market. Definitely, you want to remain long the market. Especially if you look at the equity markets here, as it's always been a winning strategy when you look at in history, no matter the plunges that we've seen in the past and the recessions we've seen in the past. When you look at a 20, 30, 40, 50 year time frame, the markets are going to go up because the stock market and the real estate market are in nominal terms. They're not in real terms. They're in nominal terms. And what that basically means is every time they're printing money, the asset prices are going to go up in value. Now, instead of shorting, right, and betting against, you can hedge because there are risks out there to protect yourself. We look at macroeconomics to figure this out, right? We look at macroeconomics to see, okay, the unemployment rate's ticking up. Every time we see this in history, we see the move up higher, right? It tends to lead to so and so. We tend to see that move up, then we tend to see that so and so being that recession, that crash, that black swan event. I'm still on the camp and I still believe there will be eventually a time where we will see these asset prices turn around and plunge. We're not there yet. It's been a very long recession, long time, of how long this has been going on with all the bearish arguments out there, right? But we are yet to see the true plunge. And when I'm looking at the certain indicators and I look at the yield curve, we're still not there yet. But watch the unemployment rate, especially in Canada, because not only you want to watch out for 50 basis point rate cuts, I'll tell you when you want to start being worried. When you really want to start being worried and when the shit hits the fan is when you get that 75 or 100 basis point rate cut, okay? The 75 basis point rate cut is when you really want to start being worried, okay? The 50 basis points is already a little shocking there, right? Basically, it's a telling sign. Now, I can't tell you exactly, okay, why exactly pinpoint this is the reason why, they did a 50 basis point rate cut. I don't have inside information. I'm just like you. But they may, Bank of Canada may be seeing things that are worrying them in the banking system when it comes to liquidity, when it comes to mortgage renewals and so on, especially at the end of the year and next year and so forth, right? So a lot to be worried on that front. And with the unemployment rate going up to 6.6%, if this starts to spike up to 7%, 8%, and so forth, it's no doubt. There's no doubt that, we're in a recession, we're heading into recession, there's going to be more layoffs to come. And every time you see this in history, it turns out to end up in, bad times. So really have to monitor how this plays out. The 50 basis point was very shocking for some people. I did mention this before that we would see the 50 basis point rate cut eventually soon. But now, what I would say is start to look forward for is not the next 50 basis point rate cut. Next year, you want to look forward for maybe closer to the end of the year, that 75 basis point rate cut. That massive rate cut that comes in, right? The 100 basis point rate cut. And you want to start asking yourself why. And watch that unemployment rate. The other thing I want to watch is that as Canada is showing and leading here in the monetary policy game among all the G7 countries, I want to see how the U.S. plays out as well next year. All right, let's get past this election. Let's get past this year, right? Let's get this, find out who's the new president, the new administration, and all that. Let's get past all that and let's just see, okay, next year when we get new fresh data, next year when the data is also revised, right? Last time, what did we see about the jobs report, right? There was basically 800,000 jobs that were added mistakenly. And that's just a prelim number. We're going to get the final number that it could be more, could be less. that was overstated in the jobs report this year, right? So we're gonna see that, and these data points, they tend to be quite lagging and late. So it'll be interesting to see how this plays out as we head to more closer to the end of next year. And again, watch Canada. I say it's more of a leading indicator here for the other countries. So anyways, let me know what you guys think about this 50 basis point rate cut, Bank of Canada, recession, the US. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, and bye.